FDIC clears path for banks to engage in crypto without prior approval. Bank. Crypto adoption. FDIC. FDIC eases bank entry into crypto services, streamlining oversight while banks notify regulators. This fresh stance hints at evolving financial norms and deeper digital integration. Last updated, March 29, 2025. Journalist. Hassan Shittu. Journalist. Hassan Shittu. About author. Hassan. A cryptonews.com journalist with 6+ years of experience in Web3 journalism. Brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile. Share. Copied. Last updated. March 29, 2025 at 02:07 GMT+2. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Key takeaways. Banks gain a broader scope to offer crypto services under established oversight. Institutions must report crypto activity, preserving monitoring without pre-approval. The update reflects regulatory practice aligning traditional banking with digital trends. The Federal Deposit Insurance Corporation, FDIC, issued new guidance this week that cleared the way for supervised banks in the United States to engage in crypto-related activities without seeking prior approval, signaling a shift in its regulatory stance. Outlined in Financial Institution Letter, FIL 7-2025. The policy rescinded a 2022 requirement that banks notify the FDIC before starting any crypto-related operations. The change is part of a broader re-examination of how federal agencies treat digital assets in the banking sector. FDIC updates crypto oversight. Notification still required. Approval dropped. FDIC Acting Chairman Travis Hill said the new guidance marked a departure from the more restrictive policies implemented over the past 3 years. I expect this to be one of several steps the FDIC will take to lay out a new approach for how banks can engage in crypto and blockchain-related activities in accordance with safety and soundness standards, Hill stated. Under the revised policy, FDIC-supervised banks are now allowed to pursue crypto-related services, provided they manage associated risks and comply with existing regulations on safety and soundness. While prior approval is no longer necessary, banks must still notify the FDIC if they are already involved in or intend to pursue crypto activities. The agency will then review the submitted information and may provide feedback or further supervision. Still, the agency remains cautious. The FDIC stated that while it recognizes ongoing developments in financial services, crypto-related activities continue to pose risks, including those tied to market volatility, consumer protection, and anti-money laundering compliance. The agency also confirmed it will continue collaborating with the President's Working Group on Financial Markets and other banking regulators to refine its oversight of digital asset activities across the financial system. Wider regulatory context and coordination. This change comes amid growing calls for federal banking regulators to provide clearer guidance on crypto integration. The FDIC said it would work with other federal agencies to revise outdated interagency statements related to digital assets and banking. Although the new stance reduces regulatory friction, oversight remains in place. Banks must still demonstrate that they can conduct crypto-related operations safely while protecting customers and complying with legal standards. FDIC reconsiders crypto restrictions following industry pushback. For years, U.S. banks that experimented with crypto services encountered regulatory obstacles. Some reportedly received informal warnings instructing them to pause activities such as digital asset custody and tokenized deposits. Industry figures referred to these efforts as part of Operation Choke Point 2.0, an alleged campaign to restrict lawful crypto services through opaque enforcement rather than public rulemaking. House Financial Services Committee Chairman French Hill cited over 20 instances where banks were discouraged from offering crypto services without any formal regulatory process. Hill called for a reevaluation of how rules like the Bank Secrecy Act are applied, warning against their misuse to deny lawful banking access. In response to both internal reviews and external pressure, the FDIC now appears to be taking a more open position. Recent discussions suggest growing interest in blockchain-based infrastructure and tokenized deposits. The agency has also removed reputational risk as a factor in bank supervision, a change that follows the Senate Banking Committee's passage of the Fair Access to Banking Act, FIRM Act. The move aligns with a similar decision by the Office of the Comptroller of the Currency, OCC, and may signal a more consistent approach across federal banking agencies. Crypto commentators, including David Sachs, the White House's AI and crypto czar, welcomed the decision. Advocates say it may help establish a more transparent regulatory environment for banks engaged in lawful digital asset services. With this shift from the FDIC, banks now face fewer procedural obstacles when entering the crypto space, though regulatory compliance and sound risk management remain mandatory. Frequently asked questions, FAQs. How could banks refine risk controls in crypto operations under this new approach? Banks adopt integrated risk management by merging traditional controls with new digital safeguards. Frequent system audits, stress evaluations, and data analysis routines help maintain secure crypto frameworks. How might banks protect customers amid evolving crypto oversight? Institutions combine digital safety steps with usual methods to secure transactions. Regular internal reviews and data checks work to lower risks, keeping operations compliant with established practices. What future adjustments could shape digital banking trends? Regulators might adjust crypto rules, prompting banks to upgrade digital systems and risk controls. This shift pushes banks to enhance their digital practices while ensuring secure, compliant operations. Follow us on Google News, Trending News, Recommended Popular Crypto Topics, Price Predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. XRP price holding strong above support, rally to $5 incoming. 9 filings, 1 barrier. Is XRP ETF approval almost here? Solana-based Zebek Network launches crypto debit card with MasterCard. Blockchain news. Dark web hackers claim to have stolen user data of over 100K Gemini and Binance users. 17 hours ago. By Ruhalaman Hakanas. Blockchain news. What's happening in crypto today? Daily Crypto News Digest. 9 hours ago. By Seed Fatal Pazik. Altcoin news. Top 5 cryptos see $659 billion loss since 2025 peak. CryptoQuant. 1 day ago. By Tanzil Akhtar. Best crypto to buy now in March 2025. Top crypto to invest in. February 19, 2025. By Inesis Tavares. New crypto coins to invest in March 2025. March 12, 2025. By Inesis Tavares. 9 best crypto pre-sales to invest in now upcoming token sales. March 3, 2025. By Medb Keeley-Cuddy. 10 new and upcoming Coinbase listings in March 2025. March 3, 2025. By Elijah Rankovich. 13 new and upcoming Binance listings in 2025. March 3, 2025. By Inesis Tavares. What is the next cryptocurrency to explode in 2025? September 11, 2024. By Elijah Rankovich. Bitcoin, BTC, Price Prediction 2025 to 2034. October 19, 2024. By Leon Waters. Ripple, XRP, Price Prediction 2025, 2026 to 2030. August 28, 2024. By Eric Huffman. Ethereum Price Prediction 2025 to 2030. Will ETH reach $5,000? August 28, 2024. By Ben Beto.